What's up guys, Kate here, back with another crypto coin analysis. This is gonna be on the coin FET. Fetch AI is the #1 biggest AI narrative in the crypto space, so there could be some huge upside potential for this coin. Let's get into the technicals. Let's draw our structure on the weekly time frame from bottom to top. So we have our high, we've made a low, a higher low, and another higher high. So this means we're in a really strong uptrend. This is our low to hold, and this is our high to break. So what can we expect next? We can expect a higher low for another higher high to at least these highs right here. As we can see, this last pullback before the massive expansion, this is where we're holding support right now. Price came into this zone, and the people that have bought right here were ready to buy again and defend their orders to push price to the upside again. Let's draw in our structure when we've made this aggressive move, because you can expect a pullback, and there's also structure in the pullback. We have a low, a high, lower low, a lower high, another lower low, a lower high, and another lower low. So this is our weekly structure in between these 2 points. Yes, we are looking for upside, but if you cannot break that local structure, then you're just going to keep on dumping. But what caught my eye is that we have finally broken this high right here. So that means our local downtrend is now also pointing up, because we've made a higher high, and we can now expect from the market, the expectational order flow is another higher low for another higher high. And this basically confirms a rotation back to this high again to keep following this massive high time frame uptrend for another higher high. And that's huge, because there's still 150% to go. There's also structure in this move right here, because we have our low, we have our high, a higher low, and a higher high. So that means is we do not want to lose this low to keep this market structure from pointing up. So from these 2 points here, this low and this high here, we've now smalled our point of interest down to this low and this high. So this is our low to hold, and this is our high to break. We also have structure pointing from this low to this high on the daily time frame. Let's remove this here and let's start drawing that in. We have our low, we've made a higher high and a higher low and another higher high. But the thing is, this part right here, this is what caused the massive move up and what caused it to break this high. So once again, we do not want to lose that structure. So from this low and this high, we've now got this low and this high. So the people that were prepared to push price up here and make a break of structure, which does need a lot of volume, those market makers, those people that stepped in here, are willing to defend their orders and push price up once again to follow our expectational order flow for another higher high. As we can see, when we've entered this zone, we started consolidating. And when we're consolidating, we're either building up orders and liquidity on the top side and on the bottom side. This move is down, so let's draw our range from top to bottom. Let's mark our range low, our range high. And as we can see, we've already deviated the low. So that means possible market makers that have stepped in here are willing to push price up once again. If you've watched my previous videos, then you would probably recognize this and you would kind of know what to expect next. So let's start drawing in our 2 situations to look for another push to the upside. Let's start by extending our range to the deviation. Also, what you can see is that the 0.5 line is getting used as support and resistance really well again. So this indicates we have a valid range and we're on the right side. Situation 1, we either grab extreme demand. Let's shorten this in. We either grab extreme demand or extreme liquidity, but there is not really a liquidity source here. It's just one push up. So I'll just use the extreme demand this time. So we either use extreme demand, we tap in the extreme demand, but with our structure pointing down. When we've tapped into the demand, what we want to see is a break of structure towards the upside. We can play the higher low for another higher high towards this range high here. Situation 2 is another deviation of the low, so another point that the market makers are grabbing orders. What I can see right here is I would prefer this situation because this is our structure we have to hold. So the people that have bought all in here, they have their stop losses below this low. So that would make it interesting for market makers to come down here once again, trigger those stop losses, take over their positions, and then push price up again towards the range high. These are the two situations I would be looking at on Fetch AI. I hope you guys enjoyed the video. Leave a like, subscribe, and leave a comment. Thank you, and I'll see you in the next one.